Good afternoon, everybody. Getting ready to roll. Appreciate you being here. It is Jay Dew of the Cash Compound and Jesse Durham, one of the coaches here at the Cash Compound, getting ready for a great hour or so of Ask Us Anything. We've got some topics we can jump off of, but we look forward to your questions and concerns.
It's on, babe.
All right, I think we can hear you guys out there. Let me know in the chat your best thoughts and questions and where you are zooming in from this afternoon. It's Thursday, April 6th, 4 p.m. East Coast. Where do you think everybody's from out there?
There's no telling. Just based off the calls we take, there's no telling. I represent North Carolina.
Okay, South Carolina. But North Carolina, go on and raise up. Take your shirt off, spin it around your head like a helicopter, right?
No.
No.
I'll show you the black tar on my heel.
Okay. All right. All right, ladies and gentlemen, grateful for you to be here with us on this hour of virtual live events that we've started just about a month ago. So Jesse is in his inaugural seat today for this live event. Glad you're here. Came into the office to do this one. Okay, so ladies and gentlemen, what we're going to do here is we're going to answer your questions. We want this to be a very interactive session, and currently I'll be checking. Oh, see, there it goes. The waiting room continues to have folks join us. But if we can keep things simple and civil, we'll allow you to unmute and ask questions live and have us clarify things. Jesse is on the hot seat. He's got to answer all the questions. I'm just going to pose everything out there. How about that?
Let's go.
And if we have friction in that process, we'll send you guys to the chat. So you can always put stuff in the chat if that's easier for you, so we can get to it and answer. Okay. Doc already has something out there. We got a Nashville, Tennessee. Everybody put in the chat where you are from. We're coming to you from our HQ, and that is Greenville, South Carolina. It's really Greer, but right here on the East Coast, this is where we are. I'll mute you for the time being, but you are able to unmute yourself in the need for some verbal clarity. Okay, so we got Washington, D.C. What's up, Doc? Good afternoon. Kathy, I know that name. Nashville. And funding sources can be from anywhere. Can I pay from business account? Are you talking about paying premiums into your policy? You probably are. Jesse, how would you answer that one?
Yeah, funding policies. Can you incorporate your business into your plans, privatizing your banking?
That's what it seems like he's asking. Let us know if we get that question wrong, by the way, out there.
Clarify as you want. But can you get creative with funding policy premiums? Well, of course, because once you do realize the personal implications of implying infinite banking, the next natural steps are, well, what about my business if you're a business owner? Or what about my investing if you're making investing?
Yep. So 100%. To make it very clear and simple, can your business own the policy? Yes. Any entity that can own something else has the ability to own this asset as well. Can be a person, can be a trust, it can be a business, some entity like that. Totally fine. So I have a policy. I have several. I've got over 8 policies, 8 in the, I think, 7 in the house, 8 in the house, and several other business policies. And the business, the LLC in my case, owns the policy and is also the beneficiary. But it's not the body. The owner and the beneficiary can change every day of the week. It's a private asset. Just like this shirt can change hands. I can sell it to Jesse, give it to Jesse, or anything like that. It's mine to do with what I please. Your policy has that same ability and mutability, I think. And what you are not able to change is the body. Okay? Okay, if we make our Zoom full screen, how about this? We're going to do this for you guys, potentially. I don't know if we want to do that. We're getting some notes from our tech team out here. Okay, Doc, appreciate it. I think we did answer the question. Thank you for it. I'm not seeing that ability here, but I do want to share my screen if we can. Talking to the tech team. Good afternoon, everybody. Once again, this is an Ask Me Anything session. We want to help you understand what's going down in the details. Now that many of you have policies or are inquiring about policies, you probably have some better questions than you've previously been able to unwind in your learning process. What is it that I know that it just ain't so? And what is it that I need to know to make it go? Okay, put it in the chat, any questions that you have, and we will start to answer whatever you got out there. What we do, let me know in the chat if you already have a policy. That would be helpful. Who are we talking to this afternoon? Do you already have policies? Have you bought, if you've taken your income and bought your asset, and are you utilizing that asset yet? Are you actually practicing the process of financing? It's a process. Banking is utilizing, in this case, cash value from whole life insurance from a dividend-paying mutual company and being able to finance things with it. Jesse, tell us about some of the things you have financed with your policies in the last couple of years.
Yes. So, I mean, we started in a debt recapture mode. We had student loan debt, credit cards, car payment. So when we moved past paying off, because we have paying off student loans, paying off credit cards, paying off the car note that was conventionally financed, we moved on to financing family vacations.
Yes.
And me and my two boys, because I let my boys and soon to be my daughter as well do business with me. We did a couple of land deals.
Oh, yeah.
That was a lot of fun. And
I didn't know that.
Great. I know.
Okay.
Been busy.
So before we get back into the chat, because I can't see it at this juncture, ask your questions in the chat to help us understand what you want to know. Reminder that your premium, Jesse's premium in this case, goes into his whole life insurance policy. And because a death benefit is now owed to him, guaranteed, must be paid, whole life insurance, get it? Pun intended here. There is an equity value to that today. Cash value is the net present value of the future payout, the death benefit. Does that make sense, ladies and gentlemen? The cash value is what is equity. When we think about our homes in real estate, we understand this really well. On the leftmost cup here, cup 1, we are paying mortgage premium. We call it a payment all the time, but it's actually mortgage premium. Why? Because cup 3 is the entire value of the property or the house, everything you probably borrowed from the bank, and you must now pay off by putting in premium in cup 1. And after 15 years or 30 years, everything has moved from cup 3 to cup 2. We've paid it off. And on the way there, on our journey, we are gaining equity, right? We've got equity value in this house. And similar to whole life insurance, both that death benefit and that cash value keep rising because the value of the house often goes up because of inflation. Yes?
Yes.
Cool. All right, Jesse, anything you want to add to that as we ask people
I think
for more
the
stuff
house,
in the chat?
I mean, we'll check the chat and see what's being queued up, but I think the house example is always interesting for a couple of, and that's not where you start. You know, you start probably by doing something like what I've mentioned already. If you have debt, you probably want to tackle that, recapture that. And yet, when you do consider the differences between what it means to own an asset like a properly structured policy versus a home, and we're going to have homes for the folks that want homes. They're going to have homes. They
of
should
course.
have homes.
Yeah.
But we don't necessarily consider who controls the collateral in that relationship over 15 or 30 years of our life.
Yep.
Whereas with a policy, it's a perfectly collateralized asset because the asset's providing its own collateral while we're still able to leverage the cash value. So it's just an interesting change of relationships.
All right, here's a question from Abinay. Am I saying that right? Abrinay. What's the minimum or maximum start of cost for a policy, Jesse?
Yes, sure. So everybody wants to know the range or the spectrum, and my answer is there that everybody's going to have a different answer because you have a particular financial footprint today that's indicative of you and where you're at right now. So that's my knee-jerk reaction answers. Everybody's different, and that's why we talk to people day in, day out about their particular situation, and we're building policies for their particular situation, where they're at now and where they want to be. Are there insurance answers to answer your question based off of your age and medical and all that kind of stuff? For sure. But I think what we need to start with is, what do you want to use a policy for? Because if you tell me you want to use a policy for X, Y, or Z, well, then we can consider how to build that policy and fund it with premiums that are appropriate for what you want to do.
Okay, I love it. Now, hopefully that's a good answer for you. I'll give a different answer that might help you think through this. So number one, you can put dollars inside insurance at any level. He said that. Premiums in whole life insurance, the style of insurance product that we are going to use for the IBC concept, infinite banking concept, do not rise or change. Cost of insurance does not go up as you get older. So when you pick premium, ladies and gents, that is the premium. Mm-hmm. The mode of premium might be monthly. It might be annually. So let's think about that. Monthly is $12,000. I'm sorry, is $1,000 a month. That's the same as $12,000 annually, right? You pick the mode of premium. We don't care, okay? You pick what it is. But like Jesse said, there is going to be a threshold because your body is part of the system that puts this together, right? The insurance is on your body. You pick the premium, however. This is a bank system. Jesse, let me ask you this question. I asked it earlier. We had a team training, as we do, and I asked and posed questions like this to people who ask questions like that. If you could place your money inside a system where it was guaranteed to compound and grow for the rest of your whole life, and you get a separate pool of income tax-free money to utilize because your money was in the game, how much of your money do you want in that system?
As much as possible.
My man. Okay, so does that help? We can get more specific. This isn't Ask Me Anything where we'll get more specific, but we want to make sure you guys have the foundational knowledge before we start throwing numbers at you or showing you things. We have another question here and one on, Jesse, can you read that one here on YouTube? Can you see it?
Let's see. Hey, somebody's saying, hey, J-Do, but then the highlighted one, just had my physical exam last Saturday. I'm planning to make, I think it's $1,250 payments every month. How much money can I add to cash value the first year?
All right. Great question.
Yes.
Great question. So when you have premium, we just talked about your premium on your policy is whatever you pick. This young man or woman picked $1,250 per month. Great. Okay, that's going to generate a cash value because of custom setup and paid up additions. So that's what I want you to put in the chat if you're listening. PUA, paid up additions. Everybody put it in. That's what we're here talking about. We're answering Mr. Eve Martinez. Yeah, Ever Martinez. Yeah, Ever Martinez. What we're doing, PUA is what that question is about. Paid up additions. How much extra cash can I add? Paid up additions is where we get technical. Okay, so what's going on here is every dollar above your base premium is going to generate cash value in the early years of a whole life policy. I'll say it again, slow or fast. What's up? Staley Brandon is out there. What's up, Staley Brandon? Okay, finally, the email is coming to you. The email you've been waiting for. Okay, every dollar above base premium in the early years. It's a custom writer available on whole life policies that we write, as the word might be in the jargon. We're writing policies with that are, what's the word I'm looking for?
I was wondering if you're going to use a word that I don't normally use.
What am I writing? What am I? Overfunded. I'm sorry. Overfunded. Yes. Okay. Yeah. I was like, where am I going with this? Overfunded, and that creates PUA. Those PUA dollars create cash value. In the early years, that's how you're going to have cash value. So to be technical, hope I don't throw you off, you have a lot of extra room in most company policies in year one to add more beyond your contracted premium. We don't know those numbers. I have no idea what those numbers are, and they move. Jesse, tell them why.
Well, I was already thinking about my answer for the question, for my answer for that question in general. You might have to re-ask me that if you want me to answer it.
Okay. So how much extra can we put in?
So, yeah, it's going to vary depending on the company. It's going to vary respective of the size of scheduled ongoing premiums that you have. But let me just give you the simple answer. The simple answer is on each of my policies, every single year, I want to pay my scheduled premiums and as much more as I can every single year. If I have extra money, I want that to go into my policy because that money is going to forever compound for the rest of my life. And that's just more capital that's at my access to use for whatever it is that I'm doing in my lifestyle. So me personally, every year I'm calling each of these companies up, and I own multiple policies with multiple companies. And I just say, hey, how much can I pay extra above and beyond my scheduled premiums? Because I'm treating it as my banking system, and I've never made too many deposits into my accounts. So I treat my policies in that way.
Yes, so there is going to be a line from the government that's going to max out how much we can put in there. It's called the 7-pay test to help us find out the MEC line, MEC, Modified Endowment Contract Status, which then makes your cash value taxable. You don't want to hit that. So it is a moving target. Just like Jesse said, the actual action is call the insurance company and ask how much extra can be put in so it will continue to grow for you forever and generate immediate cash values. Great question. Thank you. What else do you have for us? Does an overfunded policy first last from YouTube asks, does an overfunded policy automatically convert to a MEC? No, it only becomes a modified endowment contract, which I mentioned just now, makes the cash value taxable, makes that growth taxable. If we go over the line, that is the 7-pay test. Every policy is going to be different because of what we did yesterday and who it's on and how old they were. And it is a moving target, 7-year moving target. Is that helpful? Let us know in the chat. Okay, I'm coming back to the Zoom chat here. Jesse, should I look to do a monthly premium based on my gross or net income? Chris, appreciate that from Zoom.
Great question. And I think evaluating, here's one metric that you can look at. You could look at what percentage from my gross, what percentage of my net is going towards a policy. And it might be different if you're starting your very first policy versus subsequent policies. If you're asking me on your first policy and you're figuring out what is an appropriate amount of premium for you, should you base that off of your gross or off of your net? It might not be that big of a difference, but if you're in a situation where there is a big difference between those two scenarios, I still say that you're going to overall look for a range between, is this number that I'm considering logical for me, reasonable for me? And then is it also, though, ambitious or imaginative? And I just think that somewhere between, I'm using Nelson's words, right? He said this whole idea is an exercise in logic, reason, imagination. So I think your
prophecy.
Premium, right? Yeah. So I think your premium should be looked at in that way. It should make sense for you. It should be reasonable, but also, I mean, what are we talking about here if we're not talking about something ambitious or something significant enough that it's going to impact what it is that you want to use a policy for? So if you're looking at your gross income, just ask yourself, okay, what percentage of my income is the premium that I'm considering representing?
That's a good point.
Is it 5%?
Yep.
Or is it 50%? Because if you're telling me, Jesse, I'm thinking about 50% for my first policy, maybe we shouldn't bite off that much. Maybe we should start a little more logically and reasonably.
So our motto around here is tracking the code to cash flow. So if you put in 50% of your income and you're not able to cash flow in the next several months and years as your policy continues to earn compound interest. But I have a question for you, Jesse. Is the first day the best or the worst day for a compounding interest account?
The first day is a great day, but it's always the worst.
The worst day. It's the least efficient. Okay. So first is the worst. So you've got to remember that, hey, when you get started with this policy, the cash value that's going to be available immediately because of the custom setup that we're going to do, it's going to be the lowest amount it ever is. Every day it grows. Every year you will see that growing change. Cash value must reach the death benefit upon maturity. So it just keeps going up. However, day one is going to be the least efficient. So you've got to make sure, like he said, you're managing your cash flow so we can keep this thing going forever because it never goes backward. Always gets better and always gives you more cash.
Right. There's never a loss in value, but there is a loss of liquidity in the
early years.
Stages.
In the early years, the capitalization phase, the phase in which you are pouring in deposit premiums and your cash values have not yet exceeded them, because they will exceed them and get way beyond, which is awesome because they're not taxable.
So to peg that to a number, if I could, just because that's a really great question. If you're talking about 2% of your net or your gross income, are we really talking about you doing something significant in becoming your own banker? Probably not. But if you're talking about 50% of your income on the first policy, maybe we need to dial that back.
Yeah. Unless you are very efficient at margin between what you bring in and what you spend, because then you'll be fine. Right. You can cash flow it.
And that goes back to speaking to individuals about
their So we're here to help. We're here to help on that. Great question. Can we flip over with our tech team here to YouTube potentially? if there's anything, or let us know if there's anything new on YouTube. All right, Chris is in the Zoom. He says he is an independent contractor. Welcome, Chris. We're brokers around here, so we actually don't really pick on and call out insurance companies. This is a live event where we actually get into more specifics on that. We don't do it on our other social media channels, as to not confuse people. The process of banking is about you and having an efficient tool to do that. However, it's not about the insurance company, but we're independent brokers as well. So we utilize about 5 different long-term, A-rated, 100-year-old mutual life insurance companies, and we buy one thing from them, whole life, and we customize it for cash value. Mm-hmm. We want those dividends. That's why I use a mutual company. We want longevity. That's why we use 100-year-old companies. We want to use a company that lately there's been a change, a pretty public change within our space between what I would call accumulation companies and utilization companies. Mm-hmm. Not every company out there really wants you to go in there and get that cash value. So we're going to call those accumulation companies now. And you know those accumulation companies because they've been around a long time and they do lots of marketing. But we want to use the utilization companies because we want to be our own banker. We want to get to that cash value. Appreciate it, Chris. Okay, anything else from, we can get into a teaching topic here, but I want to make sure if you guys have more questions, we'll give you more answers. Is there anything going on the chat? If you're on Zoom following us this afternoon, welcome. It is Thursday, April 6th on YouTube and Zoom and our live Ask Us Anything session. I'm Jay Dude. This is Jesse Durham, and you can follow us at The Cash Compound, at The Banking Bros. And Jesse, what's your handles?
I mean, you can Google me. I'm on all the channels. I guess you'll find me, Jesse W. Durham.
All right, Jesse W. Durham. Okay, what else do you guys want to know here? Anything specific? I've got some examples of some illustrations. Shout out if you want to see them. All right. I've got some illustration examples that could be helpful to you. Did I hear from you guys whether or not you are already practicing IBC, Infinite Banking? Put that in the Zoom chat for me. Ooh, you know what? Let's check to make sure nobody else. Am I able to see that everyone? Oh, here it is. Is there anybody in the waiting room? I want to see, or can I see that? Can I tell? Okay, Yelenia is not yet. Wow, this is small, Jesse.
It is.
Yeah. Okay, Yelena is not. Chris has 2 policies. Very good. Did we set up those policies for you, Chris? How long you been banking? Remember, for any of you out there who have insurance policies, we can help review them for you. Some people wonder, hey, do I have the type of policy that I can do this whole leverage and lending and banking with? We can help you with that. So if you get on our calendar or click our links in our bios, you can give your coach. Everyone will be assigned a free consultation with a knowledgeable coach who does and practices this, and they can help you determine and understand what you have. Many, many people. Actually, the Cash Compound contracts a business coach, and we meet with this business coach for an executive meeting every week. Okay, we're paying them money to do that. We were a little skeptical at first, you know. That was something we needed to grow into. Mm-hmm. Find someone who's doing what you're doing, got what you want, and go for it. And we reviewed his universal life policy today. After 6 months or so of working with us, he finally showed us a policy he had, and we walked him through. Okay, nice. Help me understand what this means. Why is this number going this way? Why is this one going this way? We will help you as well. Mm-hmm. Some of you have policies out there, term, universal life, indexed universal life, maybe even whole life as well. And we'll help you understand what you have. And if you want to use it for banking, then we'll help you do that if possible. But in most cases, we help you understand what it's actually built for. Mm-hmm. All right. Okay. Let's see here.
Not yet. But I got
First, last, what's the cost for helping?
Oh.
What's the cost for helping, Jesse?
Nothing. That's it's. I mean, the consumer pays for everything is my libertarian answer. Of course, is the consumer pays for everything. But when we have consultation calls with prospective clients, that costs nothing. You can text us, you can call us, you can jump on these. We've got tons of content online, of course, free access. We have premium content as well.
We do.
We do a lot at no cost.
Yeah. So everybody who wants to talk and get walked through how to do this process, coaching access is free, actually. But you're going to have to go at the pace of getting on the calendar and walking through that coach's, timeline with you. That's not a problem. But when you want to continue your education, we suggest you jump into our library of content. If I'm able to find it, everybody here, would you like it? Let me know in the chat. We will give you access to one of our subscriptions or our courses by the end of this call. Okay. Chris says, yes, he's got 2 with Hannah. Hannah's with one of our partner organizations. So boom, he's got one with her 18 months in, and second is 4 months in. Very good. All right. Sean says, I had SGLI. Remind me what company that is. SGLI, something life insurance in the military. I am now a veteran. Can I convert it to whole life? You can convert it to whole life if they allow you to do that at SGLI. So that may have been the term that the government issued you automatically when you're in the military. Let me know if I'm right or wrong about that. So term will expire. Well, help us understand what's the difference between term and whole life.
Yeah. Term is you paying a certain amount of premium for a certain amount of time, a term of time, and when that term expires or when you change employment or what have you, or transition out of the military, then no more insurance.
Yeah. So if the insurance was paying for it, it might be gone. You probably kept it, Sean. Service members group life insurance. Yes. Okay. So you probably have let me know if I'm guessing right or wrong out there, Sean. 30-year term. You got out. You still have it. So you're paying for it. And if you can convert it, if there's whole life options at Service Members Group Life, then yes. If they allow you to convert, that's a customer service call. Can I convert this to permanent? Can I take this death benefit that I have on this policy and convert what I'm paying in premiums to make it permanent so it will last forever? Okay. We don't utilize that company for our process of banking, but so therefore I don't know if you can do that, if there's that term and condition for you to take it over. You're welcome. All right. What's up? Yelena says usually level. Yelena is saying a few things to me in the DMs, but Yelena, I'll keep you private if you want me to keep you private here, but if you could expound on your question, that'd be helpful. Okay, you guys want to see some policies that first last, analysis of current policy. Yes, okay, I'm going to show you a current policy that I actually have. It's very, very small. It's on my youngest baby, and I want to help you understand a few things about it. We don't always do this, but on the live experience, you get the premium stuff. Okay, so let's pull something up so you can see. Might be helpful to you, but please continue to ask questions. All right, guys, can you see? We'll put this based on what this is going to expand to, the top right corner. Can you guys see that? I think you can. Okay, what we're looking for, nope, let me give you the other one. This is one I'll show you second. I'll ask Jesse some questions about it. Jesse has not seen this. Have you?
No.
No, I don't think you have. Okay, so you can see at the top, ladies and gentlemen, if you are looking, if you can see my cursor, I'm not sure if you can out there, it's pretty small, but we've got a baby, an age 0 male, okay? We're putting in a very small premium amount here in the top right, left, annual premium of $1,200, okay? $100 a month on a child. It's a very small policy. You can see that I'm contracted to put this in, so that's what we like to show as cup number 1. The money we're depositing in. Right. So Jesse, tell us, when I give the insurance company money, what are they guaranteeing happens?
They're guaranteeing that you're going to have a death benefit.
Okay, how much is that death benefit here?
On this particular policy, 146, if I can read the number from here. 146,000?
146,000. Everybody see that? 146,000. So Jesse, here's my question. Between me, the owner, my child, the insured body, and the insurance company, who took the risk?
Well, you have put that risk on the insurance company.
Right. We've given them $100 a month, $1,200 a year, and when my child dies, if he dies this year, they owe us $146,000. Be very tragic, but I'd have a few dollars to wipe my tears away with at his homegoing service. Okay, guys, understand what's going on here. Insurance is the transfer of risk. We pay premiums to the insurance company, so they take on the risk. If the tree falls on the car, they pay out. Got it? But it's permanent. They must pay out. The difference between car insurance and whole life insurance is what may not happen in the car insurance.
An accident, a problem.
It may not happen. Okay, here there must be a death at some point. There must be a loss. That pay has to come out.
Yeah, going to happen.
In car insurance, we hope we don't actually need a payout. But we don't want to take on the risk. So we give them the premium. Got it? Guys, the two middle columns between the two that I pointed out here are both say cash value on them. Jesse, help us understand. Cash value in the lefter column and the righter column is PUA cash value. What's going on here in year one?
Right. So every time you look at an illustration, there are a couple of different ways that a company can lay out the numbers. Here on the left-hand side, you've got guaranteed values. And then on the right-hand side, you've got the non-guaranteed values that are going to include the projected dividends. Okay. That's what we're talking about right now, right?
Okay. So I'll go over there and show it. Okay. Non-guaranteed side, right-hand side, left-hand side. Okay, so cash value. So tell everybody what's going on. People want to know, hey, how soon can I get to cash value? How much will be there? Explain what you see in this policy as the possibility for our family in year one.
Yep. So year one, you've paid your total of $1,200 in premium. The guaranteed, no, you got the highlighted.
Yeah, highlighted here.
$465. Sorry, I had to peek over the screen. There's $465 in the paid up additions cash value because there's zero guaranteed based off of the base.
Based off the base, yes. So we mentioned earlier on this call, base premium and PUA premium, they create different speeds of cash value. How about that? Different speeds, both growing, and you can see that down those two middle columns. So Jesse, important to note as people are looking at this particular company, which I'm still not even showing the company, it's not about the company. When you're looking at your total guaranteed cash value, you have to add those two numbers together.
Yes.
So we are going to do that for you if you get a policy with us and we're coaching you through the banking process. We will actually put this into a one-sheeter so you can see the cash growth year by year, and we'll add the numbers together for you. But Jesse mentioned there's two sides. The left side of this page is guaranteed. Tell us what's going on the right side and what's different.
Yeah, the right side, the non-guaranteed side, is taking the projected dividends from the company into account because the dividend is not guaranteed, and yet Jadu's already talked about how all these companies, they've been paying dividends for over 100 consecutive years. So we can have a high expectation.
I believe so.
Of experiencing dividends.
So dividends are doing what exactly? I just highlighted it for us to help us understand the election we've chosen. Dividends can come to the house, and they can send them to you in a check or direct deposit. Or here's another option.
Yep, several options. The one that we favor is buying paid up additional insurance.
So you're going to not take new money, and you're going to buy more insurance and put it back. Why does that make sense?
So if you take your dividend and you buy paid up additional insurance, you're going to increase your cash values. You're going to increase your death benefit. So if you look at it, yes, you could take that money now as a check from the company, but you could also take those dollars from today, depreciating dollars, and further fund this appreciating asset.
I like the way you put it.
Multiples in the future.
Very good. So you can see across this line one, everybody. First and last is asking a great question here, and you're going to see if we just move beyond year one. The question is, coming from the YouTube live stream, why does the guarantee and non-guaranteed, why do they have the same numbers? Okay, so we can see that the non-guaranteed total net cash value here on the right-hand side, if you guys can see this, is actually $4 higher than PUA cash value in year one.
So very similar.
Very similar.
Beginning years.
Very similar. Because when something is compounding, what's the best day? Day 100 or day one? 100. Day 100 is going to be the best day. Day one, we've just gotten started. So our dividends have not accumulated very much power yet. We haven't generated very many of them. We just got started. The insurance company is not projecting to award us any more than $4 extra what buys $4 extra of cash value in year one, but keep looking down. Okay. Let's come to a break in the page here. Maybe the difference between, Jesse, can you add these up? Do you have a calc phone on you? First and last, you see this and everybody else? Okay. In year 10, our cash value, base cash value is $27.87. We have to add that to the PUA cash value, $53.74. What's our total number, sir?
$8,161.
$8,161. Okay. And let's look over to see what the dividends are projected to do in addition to $8,161. All right. PUA cash value is, I'm sorry. Oh, we've got it right here. I'm sorry. With this company, they've put it all together. That number is highlighted now, 8,911. Okay. So let's subtract 8,161 from 8,911. And now you can start to see how differentiation is going to take place. What's the difference?
Where did that $750 come from?
$750 the insurance company has awarded you on an annual basis, total at this point, projected to give to you in this particular policy, even without banking, ladies and gentlemen. We don't spend a lot of time focusing on this on the front end or showing you a bunch of stuff before you get started, unless you're on a live experience so you can visualize it. Why? Because this isn't banking. This is just what the policy is going to produce. These are the numbers. Of course, the right side is the non-guaranteed side. This particular company has paid dividends every single year for, I believe, this is year 145 or 146. Do you know?
I was almost going to say 147.
Okay, maybe 147. Okay, so dividend scales change, and your banking process will make the numbers bigger and better if you play honest banker. However, this is what the policy is going to do throughout my son's life anyway. Got it? Okay, hopefully that was helpful. Remind us of that death benefit that's ready for us at the outset, Jesse. I want to show you guys something.
It was 146 from the start.
146,303. 303. Now, I actually overfunded. We had a question a little bit earlier. I actually overfunded this policy with $400 extra in the first year. Okay. So now I've pulled up an in-force illustration. Some of you need to go to your agent or company and ask for an in-force illustration so we can review it for you, because this is what actually happened because I put in the first year extra money. Jesse, can you see right there what is my premium listed as here? $1,600
plus the $400.
All right. I put in $400 extra. We had a question about that. The insurance company told me $400 extra would fit. Okay. So I put it in that day. I had $400. I want all those dollars to grow for my son's whole life. Hopefully he lives to be 122. All right. Well past me, and all of these dollars way back in the day in 2022 when we got this policy in force are going to grow for him. So what is our death benefit at the outset of this policy because we put in $400 extra bucks?
150.
150. Okay. Remember, cash value has to grow into death benefit. So now we have a steeper arc and better compounding, more efficiency of capital, of cash, because I put these dollars in. You can see that already I'm at 852 immediate cash value available. When I say immediate, how fast are we normally talking?
30 days.
Within 30 days, we can get to 852 if we needed it. And you can see that the numbers are bigger if you were paying any attention on the last sheet because we put in these dollars. Does that make sense out there? Hopefully it does. Let us know. All right. Give us one more question from YouTube, Jesse, and let me go to the Zoom chat.
Let's see. Does the cash value added as dividend become part of death benefit? And then assuming the 146 has already been paid.
All right. We're going to have to do mental gymnastics to figure out your question first, last, but we appreciate it.
Let me take the first part of it, perhaps.
Okay.
Before
all right. We'll break it down.
Does the cash value added as dividend become part of the death benefit? So when you're awarded a dividend, death benefit goes up.
Yep.
And therefore, the cash value must also inherently go up.
Remember what cash value is, the net present value of the death benefit, and that cash value must reach the death benefit by maturity. Okay, got it?
Yep. So if the company's promising on this child's policy $146,000 to the family, to the beneficiaries in the future, they're willing to pay that $800 or that $1,200.
Yeah,
or
they're willing to let go of it now.
Today.
That's the equity. That's
That's
what's
what we can
liquid
leverage
today.
and bank with.
Yeah. Okay. We're going to go. Sean F. has got a good one here. And earlier, Jesse showed his cards. He mentioned libertarianism. So so I want the long answer for this one. Sean is on Zoom with us live, and he said this: how are the paid premiums protected? The policy is not insured by the FDIC or NCUA, nor guaranteed by a bank.
Great question. Great question. And it's folks think that it's so relevant now because of all this bank run and bank issues that we're hearing about in the news. And where I like to start is, historically speaking, again, if I say we work with and we personally own policies with these companies that have been in business for 100 years, just walk through the history with me real quick of the past 100 years. Because how long has the FDIC been around? I'm just saying, right? Okay.
Yeah, keep going. Yeah.
Yeah. So what has happened in the past 100 years? Not even 147 or whatever, like we're talking about with some of these companies. In the past 100 years, we've had the Great Recession. We've had the dot-com bubble. We've had the housing crisis. We've had Y2K. We've had stagflation, inflation. We've had the U.S. dollar going off of the gold standard. We've had Vietnam, Korea, World War II. Maybe you've heard of it. Your grandpa certainly did.
Recessions, depressions, Yo Mama and Obama. We've been through it all.
Right. And these companies, okay, just to talk about the history of these companies, also while that world history has been going on, that American history has been going on, not only have they met every death benefit claim, but the companies
Hold on, say it again, Jesse. They didn't hear it in the back.
Not only have they met every single guaranteed death benefit claim, but they've also paid a dividend above and beyond that because of their performance during all these tumultuous times. So I get that banks and FDIC and all this stuff is on our minds now because it's on the news, so it's going to be on our minds. But when you really take a step back and look at history, I think there's a lot there to consider. Now, the maybe more detailed answer is going to be that, well, you need to recognize that when you own a policy, it's going to be through a state that has its laws.
Yep.
And insurance companies are different than banks because insurance companies predate the FDIC, the IRS, the Fed, all these things. So these states are regulating these insurance companies in a really big way, for one thing, and they're not practicing fractional reserves.
You guys know what that means? When they take in premium, they cannot lend out. They have to pay future claims, right? So if you give them $1, they have to pay out 100 or whatever. They cannot lend out more money than they have. Your bank can, and your bank does not actually back your deposits. That's why the FDIC, not your bank, has a little card on the counter. Your bank doesn't guarantee it's there. SVB, you down with SVB? You guys get it? Hopefully that was helpful.
That's a good question.
It's a great question. It's a great question.
My encouragement to further your knowledge and your understanding would be to just go to the usdebtclock.org. I don't know if you've ever done this. Go to usdebtclock.org and just see where our country's at and see where your state is at. Because we're running in a deficit.
Yep.
Every state's running in a deficit. So your state's broke.
But your insurance company is not.
Right. They're paying out dividends.
Yeah. They've got the dollars. They've got the dollars. They must pay out those claims. So your guarantees are coming from the full faith and trust of the insurance company. Got it? Hopefully that was helpful, Sean. Appreciate it. What else do you guys need from us? What do you want to talk about? Anybody on Zoom, we can hear you if you want to unmute. I hear one or two of you coughing out there from time to time. What else do you need to know? You want to see any visuals here? Do you need more explanations for anything we've said? Okay, we want to remind you, ladies and gents, that we have some premium content that we want you to jump into and dive into. We are obviously always giving free education through a coach. And how you do that is you click on our link. I think we might be able to get our link put into our YouTube right now. Hopefully our tech team can do that. I will throw our link to get on the calendar with one of our coaches inside our Zoom chat right now. And, or Jesse, why don't you can you type in yours specifically? I think since you're here, why don't we,
I mean, that's a good question, and it would make sense for me to be able to regurgitate that right to you, but I don't know.
No problem. If you guys wait for me for the next minute as we talk and answer questions, I'll find it for you. So We're going to put Jesse's in there if you'd like to talk to Jesse about doing this process for yourself, and you're not doing it already, or you want him to review some of these ideas that he's mentioned to you. That's what we've got for you. We've been practicing banking, both of us, actually. This is the 8th year of premium for our first policies that started in 2016, yes?
That's right.
Yep, 2016. And we
paid a nice size premium today, actually.
Oh, did you?
On my wife's policy.
Oh, very good. Is it an annual premium?
Well, it was a PUA.
PUA. All right.
Find out
very good. Well, tell us about it. Tell us about that.
So, that's our second policy. So we first got a policy on me. I'm a man, so from the insurance side of things, it still makes sense to get me insured before her.
Yeah, 100%. Mortality is
right.
different.
It just is what it is.
Uh-huh.
So there was that. But also I was the one that was really learning about this process, and she was just along for the ride. She was down for the cause. So we got the first policy on me. But it probably wasn't 6 months later that we realized, you know what? We get how this goes now, because it's like riding a bike. It's one thing to watch somebody else ride a bike. It's another thing for you to get on there and steer and pedal and everything. So we recognized pretty quick that we wanted a second policy. We were attacking debt in a big way at the time. So that means that we wanted to pay more premiums also, just like Nelson talks about in his book. He actually saw that paying premiums was the solution to the problem.
Ain't that something?
So we got a policy on my wife as well. So hers, I guess, has been in force for 7 years now. We just paid, a significant paid up additions only premium payment today.
Love it. Love to hear it. Okay, here, we'll go back to Zoom, but we see you out there in YouTube land as well. Okay, we just dropped the link on the Zoom chat. If you want to have a one-on-one conversation with Jesse, he'll be your coach. It's free 99. A free 99 call, okay? So you can chat with him. He can walk you through, hey, these are the resources that you need. Here are the answers to the questions that you have. Nothing to sell you, only to educate you on what becoming your own banker is all about, and he'll help you do it and get it set up when you're ready. Can the dividends and or death benefit be paid out in precious metals like gold and silver? There are no stupid questions, but this one's close.
No. Oh, come on.
There's a dollar sign at the end of the column. It's a dollar sign. They don't pay it out.
Ask that question.
They don't pay it out in anything else. There's a dollar sign.
Get on my calendar. You're my kind of people.
Okay, very good. That's why you need to talk to Jesse.
People that would even mention precious metals. You're my kind of people.
You can't trade precious metals at the drive-thru. I need to eat. So I think it's a great long-term strategy that you still need to trade in for cash later to go through the drive-thru.
Right. We're all buying groceries and putting gas in the car with dollars. All claims, they're going to be processed with dollars. Now, what you do with your dollars and your cash values, that's up to you.
Buy gold if you want. Totally fine. Totally fine. Okay, first and last. Will a crypto or digital dollar affect the policyholders at the moment? Nope. So the digital U.S. dollar already is in existence. You still have to trade digital or currency in the form of paper money at the drive-thru. It's not going to change the fact that the growing dollars are still going to get paid out in American U.S. from the company that you work with.
It's a great question. It's a relevant question. I mean, when you realize that a policy is a contract, it's you contracting with the insurance company and them contracting with you once that policy is in force.
It's a unilateral contract. If you give them dollars, they're contracting certain guarantees with you and for you that you'll have access to while living. That's what we like to talk about. And of course, after death, and your money will go to who, and we say friends, family, church, and charities. It'll go to whoever you want it to go to. And those cash values and that death benefit, no federal income tax.
Yep. And money's just a means of exchange. We've had U.S. dollars that were tied to the gold standard again. See me throwing precious metals back into the conversation.
All right. Sean's your guy. Sean in Zoom is your guy.
I know. And we've had dollars that have been fiat currency that haven't been tied to the gold standard.
All of the dollars today.
We're still using dollars. So if we transition to something crypto and that's what America is doing, then what's really changed? I'm just saying.
Yeah.
Money is just a means of exchange. Dollars are just a means of exchange.
Yep. Okay. First and last, is there such a policy that exists for a small business startup? Whole life insurance and life insurance in general is on a life. Now, the owner can be your small business or your large business. The beneficiary can be your small business or your large business, but life insurance is on a life, a human body, and you can fund your small business with that policy if you like, for sure.
You read that comment? People throw in facts.
Metals preserve better than the dollar. Cool. I just can't use them at the grocery store. So we're going to use them. Yeah, he said it. Money's a means of exchange, so it needs to flow. It's a means of exchange, so I can't exchange food regularly with those precious metals. Remember, we're going to be able to take back the financing capabilities in our life with this. So you can finance precious metals if you like, but whole life insurance is not an investment.
Correct.
It's not an investment. So we just want to make sure that's clear as we have fun out here in the chat. You want to chat about that a little bit more?
Can.
Yes.
When we've already talked about you're mitigating risk by getting life insurance. You're mitigating risks. Step one. When it's built this way for your banking purposes, it's high cash value, and what you do to finance your lifestyle, including your business ventures, like we're getting asked about in the comment section, or your investments. So we're not making investment advice here, and buying life insurance itself is not investing. It's a way to capitalize your own privatized banking system for what you're going to do. Personal, business, investing, whatever. It's the infinite banking concept.
There you go. Love it, guys. It's been a great, stimulating conversation with Jesse here. Remember that we dropped his link. Jump on his calendar. There's nothing that you have to do. Just have that conversation with him and start the process of expanding your thinking and recapturing your wealth. That's what he's going to do on that call with you. So you can ask him anything about all these topics that you want to dive into on a personal level. Hey, we heard your answer for the group, but I have a question about my personal financial life and situation.
Yes.
That's what that call is going to be all about. It's all about you. We have put up on the screen, if we can get the tech team to allow us, our banking course we want to bestow upon you. Thank you for going live with us this afternoon. We've got a QR code that hopefully we can get up on the screen for you. That's going to give you access to one of our starter courses. Okay? For those of you who are beginners, we want you to continue your education. Just in case you die tomorrow, that's what the life insurance policy contract is for. But if you don't, let's keep learning like we're going to live forever.
Absolutely.
So we got that QR code there sitting for you. And if you can see that or get to it, jump in. We might have to share it. And I don't know. Has our audience on Zoom, have you guys seen? I don't know, because it's two different. We're streaming on two different platforms right now. So this is what I'll do for you. I'll make sure that our Zoom audience can get to it. They've already gotten on your calendar, I'm sure. Everybody put I'm in. Okay, Zoom can't see it. I'm sorry that Zoom hasn't been able to see these things. I just realized that. Everybody put I'm in when you find Jesse's calendar. Find a slot on his calendar. And for our Zoom audience, here you go. All right, so Zoom audience has got it now. We'll probably enlarge that for our YouTube audience as well. Okay, you've got Jesse's calendar. You've got that link there, and we walked and talked you through several different ways and means to understand utilizing whole life insurance, the most efficient product so you can harvest and process and grow your wealth and keep it with you. It's a private asset, and it is an asset, always going up. Always being able to cash flow, so much different than many other investments people utilize on a very regular basis, compulsory or not cash flowing for you, but we need money to move in exchange rather quickly, or else we're going to get hungry real fast.
Yep.
Okay, anything else for you guys? Do we have anything else? You've got a couple minutes here. We appreciate you jumping on. Remember, the Cash Compound has a weekly podcast that drops on Fridays in most places, okay? All the places that you like, including the video version on YouTube. We're The Banking Bros on YouTube, and we are The Cash Compound in our course library. So we've got you access to that course library with that QR code on the screen. For those of you who can get to it, jump in there. And in the chat, we've got Jesse's time slots, whenever you want to talk to him. Anything else that we can bless you with today? Banking has completely changed our lives. We want to share this information with other people. We suggest that you save your money and spend someone else's for the rest of your whole life. Growing and cash flowing. That's what we do here. We hope you've enjoyed us, and let us know what we can improve to help your learning of the process of becoming your own banker and retiring wealthy, but playing with all your money on the way. Anything else you need to close this out, Jesse?
No, I'm just happy to be here. Happy to have this first live event. Look forward to the conversations.
10-4, ladies and gentlemen. Okay, we're looking in the chat for the next minute or so, and then we'll let you go. Thank you guys for joining us. Appreciate you this afternoon. Anything else you want to talk about, let us know in a quick chat here, in a private DM, anything like that. Follow us on Instagram at The Banking Bros. Follow us on TikTok at The Banking Bros. And shout out there if you want to speak now. Speak now or forever hold your peace. Okay, you're welcome. You're welcome. First, last, thank you for all that great interaction and questioning that you gave us in the YouTube family over there. Okay, guys, appreciate you. We'll talk again soon.